Hello, chart watchers, and welcome to this Monday, November 5th Market Watchers Live show with your hosts, Tom Bowley and Erin Swinlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, we have bifurcated market action today so far. You can see the Dow Jones Industrial Average having a pretty good day, up 159 points. The S&P 500 up 8. But the NASDAQ, you can see, down 66 points, and the Russell 2000 down 5. 10-year Treasury yield currently down a little more than 2 basis points, 3.19%. We did see it jump 7 basis points on Friday after non-farm payrolls, but we are pulling back slightly here today. Volatility index is back on the move to the upside. It is up more than 3% today, despite the S&P 500 being higher. You can see that the VIX is up just a bit, coming off of that 5-day downtrend. And anytime the VIX is on the rise, we do need to be careful. Leading to the upside, we're seeing a return back into defensive areas. Real estate, the XLRE, leading the action to the upside. Utilities, the XLU second. And energy also having a good day. The XLE is not featured here, but you can see Chevron Corp, one of the major components of the XLE, up more than $4 today. It is the best performing Dow stock and one of the best performers in the S&P 500. I think it was in maybe about the 5th spot on the S&P 500. The XLK technology taking it on the chin so far today. Computer hardware having another rough day after Friday's move lower. And of course, the reason, Apple, you can see that the computer hardware chart looks very similar to Apple. Apple obviously is a major component there, and it is struggling, although trying to bounce and stay above that 200 level, which I do think is an important technical area of support for Apple. All right, it's time to start a new week, Erin. How was your weekend?
I had a great weekend. I did enjoy my wine dinner. Actually, it was last night, and I survived it this morning. But it was great. Good food, good company. You can't really beat that. And I have to say, though, I didn't go to the Ducks game in lieu of going to the wine dinner. And it turns out the Ducks killed their 7-game losing streak, and Cam Fowler had a hat trick. Like, I was like, it's so hard to see a hat trick, and I couldn't believe it. We missed it, but we really enjoyed the dinner, so it was okay. But at the same time, it wasn't.
Well, still good that it's that they ended their losing streak, at least. That's for sure.
Yes, and I was very happy for Cam. So.
Yeah. Well, speaking of Cam, of course, I'm down here just south of Charlotte, North Carolina, home of Cam Newton and the Carolina.
Yes.
I went to the game yesterday and watched them play Tampa Bay, and they were up 35-7 in the second quarter. I mean, the Panthers really starting to play some pretty good football. They held on. Things got a little tight in the second half. But anyway, looking pretty good for sports here in the Carolinas.
Yes, it seems that way.
Yeah, what do we got today?
Oh, my goodness. Well, let's look. For our upcoming schedule, we have my workshop, which will be tomorrow. And I think I'm going to do the trend and condition chart pack, the DecisionPoint free chart pack. Brian Livingston will be joining us on Wednesday. Thursday, Grace and Rose should be here. And Friday, I know Mary Ellen will be back with what's hot and what's not. So let's see what's going on for the day, and then we can really get this started. Monday setups, of course, is going to be our first segment after news. Earnings Spotlight is next up with John Hopkins joining us. 10 and 10, Sabra Healthcare REIT is going to be the first symbol, SBRA. And finally, we'll finish off with the DecisionPoint Report. I'll go over those weekly charts that just went final last Friday. So let's get started. I know there were some economic reports, maybe?
Yes, there were a couple of them out this morning. We had the October PMI Services Index. That came out 54.8 versus 54.7, so slightly better than expected. And then the October ISM Non-Manufacturing Index, 60.3 versus 59.1. So a couple of economic reports that came in just a little bit better than expected. And when we take a look at the 10-year Treasury yield, as I mentioned earlier, we are down a little bit today. I had actually annotated this in my blog this morning. Looks to me like we've got an uptrend, a inverse left shoulder, a move back up, potentially to put in a neckline, back down to put in the inverse head, all the way back up to test the right side here of this neckline. And now we're pulling back. So pull back down to around 3.15, maybe even 3.12, 3.13, something like that. Could establish an inverse right shoulder. That no guarantee that's what we have here. It's just when I see an uptrend and then I see consolidation, I begin looking for patterns, and I do see the potential here for an inverse head and shoulder pattern. So I just wanted to point that out. Okay, let's take a look at some of the earnings reports. Not any really big ones out this morning. We will get Booking Holdings, which will be out later. But Cisco reported 91 cents. And by the way, this is the Cisco Food Company, SYY, not the CSCO. So Cisco SYY reported 91 cents versus 92 cents. Pacific Gas and Electric, PCG, 113 versus 112. I actually looked at a different source, and it showed 113 versus 114. Came up a penny short on another source, so I'm not quite sure which one was right. Ferrari Race, 90 cents versus 88. Saw some other information on that one as well, and CNA Financial. So I'm not sure. I want to do your own research on some of these. Some of the news outlets, I was getting conflicting data. Lowe's Corp, ticker symbol L, came in just a little bit less than expected. And then you can see CNA Financial, 117 versus 113. Another news source was showing 123 versus 110. That's a pretty big difference. So again, I think you have to do your own homework there and come up with what whichever one you believe the most. After the bell tonight, though, we do have Booking Holdings, BKNG. I will say, before we even take a look at any of this, Booking does not tend to do very well except for the first 4 months of the year. From a seasonality perspective, January through April are the 4 months where Booking Holdings tends to do really well. But anyhow, there are a number of earnings, and then there will be a lot of earnings again out this week, just as we've seen the last couple of weeks. But we will start seeing more small to mid-cap types of companies reporting. We've seen a lot of the big companies the last couple of weeks. That'll begin to slow, and we'll see more second and third tier type companies reporting. Okay, let's take a look at a few charts here. I'm going to start with that Cisco chart, SYY. So let's pull that up and see what's going on here. You can see here is the gap down, and the stock is down more than 9% today, taking out the low that we saw at the end of July. So from a technical perspective, forget about the news that came out. I don't like the fact that we've come back down and taken out this low here on SYY. So I'm a little nervous there. PCG, this is Pacific Gas and Electric. It's in that space that is being rewarded right now. Any of the defensive areas of the market are holding up better, and you can see PCG not far from breaking out to a new high. So this looks like a nice little cup off of an uptrend. I expect maybe we'll see a pullback from 49, but very buyable based on the uptrend that has been in play here over the past few months. Let's keep rolling. How about RACE, RACE? Well, the reaction here, we've been going down for a while, and this was a stock that had been performing pretty well up until 2018. We reached a high back in June, and now we've been drifting lower. But the overall uptrend, I think, is still in play here. If we go down below 110, I think there's a chance that we're going to go down to about this 103 area. But I suspect that's going to hold. So I want to kind of keep an eye on these support levels. To the upside, one thing you want to watch is when the stock bounces, can it get back through the 20-day moving average? If it can't and continues to move lower, then I think we have to be real careful there. Lows, as I mentioned, L. Actually, I'm going to go back to the daily chart. You can see, though, on this weekly chart, we went all the way back down and tested a key $45 level. We've done, we've held this 45 area for the past 2 years, almost 2 years. So 45 is a pretty big deal. We're moving back up, but we do have that 20-week EMA that we're going to have to deal with, which is up closer to 49. CNA Financial on the chart. Let's see what this one looks like. Nice positive reaction here to the earnings report. Stock up almost 10% today. It did put in a tail up above both of these prior highs and not holding it so far. So this could be short-term top. But if we do start to pull back, I would look maybe at today's open as a very key area of short-term support. So that's something to watch as we go forward. Now let's take a look at the major indices, because we've seen a huge sell-off in October. Last week we rebounded, and now this week we're starting, well, we got a bifurcated market so far. But here's the problem, I think, with the market. Once we sell off, and the sell-off occurs on big volume, and you can see the PPO turn negative on the daily chart. Once that happens, your tests of the 20-day moving average, in my opinion, become very significant. And we went up above it on Friday, but failed to get that breakout, even with the good news, with the non-farm payrolls that came out Friday morning, even with money rotating away from the Treasury market and into equities, we failed at the 20-day. So I think we have to continue to respect this 1250 to 2750 to 2760 area of resistance. When I had been writing, when the S&P had been falling down to these lows and we started bouncing, I talked about 2720 to about 2760 being what I thought would be an area of short-term resistance. We hit that last week and we're starting to turn lower. I think we need to pay attention to that. Pulling up the Dow Jones. Of course, the Dow Jones and the S&P doing better than the NASDAQ. We are trying to get through the 20-day on the Dow Jones, but it's the only major index where we are doing that. If we keep moving, see the NASDAQ, you can see that we failed on the 20-day, rolling back over and really testing that gap support area from last Wednesday when we had gapped up all the way up near 7,300, 7,280 or so. You can see that's about where we are right now. So I want to watch the NASDAQ this afternoon, see if that impulsive selling begins to kick back in again. If it does, then I think these recent lows could come back into play. If we're able to hold here and strengthen this week and get back through the 20-day, then I believe the worst is behind us. So we'll have to kind of just watch the action, see where we go later today and into the end of this week. The Russell 2000, you can see moving up, trying to get through the 20-day moving average and unable to do so as well. So again, the Dow Jones right now is the only one that's been able to get through its 20-day moving average. We go back to the dashboard and look up under the reports and analysis tools, pull up the sector summary, and check out what is going on here today. Real estate leading, utility second, consumer staples fourth. These are your three defensive groups. Three of the key areas that led the market to the downside: communication services, technology, and consumer discretionary, all lower. So I don't like the way this is shaping up again right now, but let's see if the support holds that I just talked about, especially on the NASDAQ. If we begin to see that impulsive selling kick in later today, I would be pretty nervous, given that we did make that bounce, hit those 20 days. We could be rolling over, something to think about. Okay, Erin, I know starting the week, got a few more upgrades, downgrades. What do you have for today?
All righty, let's take a peek. We've got kind of a lot here, not that many downgrades when I was looking those up too. So let's go ahead and start off with some upgrades here. All right. BHC, Bausch Health, was upgraded today by Morgan Stanley from an equal weight to an overweight. And investors seem to be pretty happy about that, with an almost 4.5% move to the upside. PMO getting ready to give us a crossover buy signal. The only thing I look at that sort of concerns me about this chart would be this very short-term resistance here that you can see at about that $26 level. That could pose some resistance. You know, it managed to trade up there a little bit above it today, but fell way backed off those intraday highs. So just keep an eye on that. But notice the 20 has crossed back above the 50-day EMA, and the 5 has crossed above the 20. All of that moves these EMAs into the most bullish situation it can be. Obviously, when you have that short EMA, that really fast EMA on the top, and the slower ones on the bottom, that's what you want to see. So starting to line up pretty nicely, Bausch Health. iRobot was also upgraded today. Canaccord Genuity upgraded it from a hold to a buy. I like the look of this chart. I see a possible flag formation setting up here. You've got the 5 just crossing above the 20-day EMA. So that's a short-term trend model buy signal. And you have the PMO that is logging a PMO buy signal today as it crosses over its signal line. So I think iRobot looks pretty positive on the upgrade. Starbucks, of course, had that blowout earnings report, and we got the big giant move on Friday. And it looks like we're getting a continuation here with Starbucks up almost 1% on this upgrade. Look at the PMO. My only concern would be at this point, it is really stretched out there into overbought territory with a reading of almost 3. But you can see it's gotten very low. The range has gone all the way down to -4. So a +4 is certainly doable. Really nice volume coming in, obviously, looking at the OBV. Starbucks, I think, still looks pretty good here. It would have been nice to get on that original move, though, I'd say. All right, Under Armour, Piper Jaffray upgraded this from a neutral to an overweight. And as you can see, we're now hitting up against overhead resistance at that June top. The setup looks pretty good here. When you've got the buy signal, it's now back, PMO is now back in positive territory. And then there you go, all those positive crossovers that put the EMAs in that bull market sort of configuration. So the only issue here would be whether it can get above overhead resistance here. So I'd be watching it. It is in an area of the market that I don't know is going to fare too well if we continue to move lower, but we'll have to see. But that overhead resistance is what I would be watching for Under Armour. A couple of other big name upgrades that I didn't go over. Bluebird Bio was upgraded. Chevron CVX was updated. Cloudera CLDR was upgraded. Netflix was upgraded today, as well as Teva, TEVA. So those also were upgraded. Let's look at a few downgrades here before we move on. Builders First Source is downgrade today. Evercore downgraded it from inline to underperform. It was really setting up nicely, and then they gave it this downgrade, and of course now it's fallen almost, a little over 9% right now after having such a great Friday. I like the shape of this bottom here. It's nice and it's a round bottom here, and you have the PMO that is rounded as well, and now has given us the buy signal. You can see an improvement in volume. It's a downgrade, but I think of the downgrades, this one looks pretty okay. You've got that declining tops trend line. That declining trend's been broken last week. So really the big concern, of course, is that pullback that we're getting today, but that might be the opportunity we need to see. Global Payments, GPN, was also downgraded today. Guggenheim downgraded it from a buy to a neutral. Not the kind of PMO setup you want to see. You can tell even without going into the thumbnail that we have a top below the signal line for the PMO, and that's always considered bad news, especially bearish in my opinion. The only thing that you could maybe, if you want to look at a bright side here with the PMO, is that it is oversold, but it is starting to turn back down. And notice the scooter has also been trending lower as well. So this one I wouldn't be bottom fishing at this point. I don't like the setup right now. And that concludes the upgrades and downgrades. There were a few other downgrades that I did not look at. And Cana, ECA, had 3 downgrades today. Hilton, HLT, was also downgraded, and Motorola, MCSI, was downgraded, excuse me, as well as Red Hat. So, it's an interesting group here. The financials, seeing some financials downgraded here, and it's just sort of an interesting setup here in what we're seeing right now, Tom.
Yeah, no doubt about it. I mean, we got a lot of different companies, like you said, upgraded, downgraded. I don't like it when you get those multiple downgrades.
Yes, that was ECA. I suppose I should just pull up that chart for the heck of it here. Yeah, 3 downgrades. I kind of can see why. And we had that big gap. That gap didn't happen on today's downgrade. That had already happened last Thursday. So pretty ugly chart. Right. Well, I guess it is time to move into Monday setups.
Yeah.
So let's see what we did last week and how it is looking. So let's see. Mine was, I think, okay, AJG. I thought I had Nordstrom for some reason. All right. We'll have to peek at what right now it is reading at 75.05. So at least I'm on the positive side there. AVAV for you is currently at 94.39. So I have to say, I think you win the prize.
Yeah, I had a good week on AVAV, but your screen's not coming up. I don't know if you were showing the chart.
Oh, yeah, no. I wasn't actually, but now I am going to put it up here because we need to see it.
Yeah, so it just got a little bounce. It bounced off of gap support, really, and went up, tested the 20-day, 50-day. And honestly, the way the market's looking right now, if I did not have that one, but if I had it, I would have, I would be taking profits and moving to the sidelines there.
Yeah, absolutely. No, you got in it right at that bottom. That was a very nice setup. Yeah, and mine, AJG, we'll show it. Not bad, but it didn't do that much. It was mostly sideways. So it kept that PMO buy signal. So I like that. It's hitting that resistance and not being able to pass above it though. So yeah, if I had, I'd probably go ahead and book the profit because I'm not so certain that it's going to be following through much more on that move. So.
Yeah, and I think too, the AJG is in the property and casualty insurance group.
Mm-hmm.
So I think a lot of last week's bounce was a lot of the oversold areas, in the casualty and insurers and so forth. They weren't really hit the way that many of the other areas of the market were hit. So that stock didn't bounce back much, but at the same time, it still looks pretty good, I think, on the chart. And if the market struggles this week, I would see AJG probably still hanging in much better than what the overall market does.
Yeah, well, we'll see how it goes. I do like that PMO setup, so that still looks pretty good. All right, but as you say, we're only as good as our latest pick. Isn't that right?
Yep, that's right. That's the life of a trader.
Yes, indeed. So let's go ahead and I'll pull up my Monday setups for this week. So I ran my PMO scan, which is right here. And there is a link to this scan at the bottom of every Market Watchers Live recap. You just can click on it. It'll take you to the article that has this scan in it, and you can just copy and paste it. I actually got some pretty good hits, I thought. There were about 24 when I did this at first. So as you can see, a pretty large amount that we had. And I looked at them on Candle Glance, which is usually how I figure out what I want to see and what I want to pick for all of you as to which ones I like. But you can see all of these have pretty nice setups. I just, I went through it and picked the ones that just I thought looked the best. So let's move over to actual Monday setups here. So, all right, so these are the 6 that I have for you. And I can tell you right now, I am going to pick NRG Energy. I really like its chart, but we'll get to that momentarily. Let's start with Abbott Labs. In the healthcare section, one thing I did notice when I did run that scan, the results tended to be in, actually I can show you right here because we'll show it to you in summary. So when I go by sector, just to see which ones came up, I thought it was encouraging that I saw a lot of cyclicals come up on this scan, but at the same time, a lot of healthcare. And materials are actually making an appearance in staples. So as you can see, really, of the ones that came through on my scan, it really was in the defensive areas. I think overall there was more in the way of hits for that. So just thought that was interesting. So I did pick, let's see, we've got Abbott Labs getting ready to have a PMO buy signal. You can see the volume on the OBV looks good, but you can see we are seeing it drop off just a little bit here on the chart, but it's been positive. We've had a lot of accumulation going on. And like I said, the OBV still looks pretty healthy here. I like this rising trend. It's still holding on to it. We keep getting higher lows as we go up this rising trend. And again, that PMO is set up really nicely. I'd like to see it pop above 71 here with that really short-term overhead resistance. But I think it has a pretty good shot. It's sitting up above that 5-day EMA. All right, Express Scripts came up, and I thought this one looked pretty interesting. It's a little bit more of a slow mover, in my opinion, as far as looking at the chart. It did have a nice breakout, though. In fact, I'm going to take you to the annotation tool because I want to show you how nice that is. So, and I put this right on there. So you can see we had a nice little breakout last week. You can see Thursday it managed to close on that level. Right now we are trading above it, and I think that's encouraging. But I like this little pop above this overhead resistance. And then you show up here as well with a PMO that is moving nicely, slowly. Again, sort of a rounded bottom, not being yanked up by a big move. So I like that PMO setup as well. So I thought Express Scripts looked interesting. HCA Healthcare was another one that I picked from the group that I saw. And, again, nice PMO configuration here. Possible, I suppose when you look in the thumbnail, you could say maybe a flag here, but the fact that we had this trading earlier before that, not so sure about that. But we do have some overhead resistance to get past and through, but there is still room to run, I think, to get up to that overhead resistance at those tops that we had in September and October. Henry Schein, whoops, let's not go to that one yet. HSIC. Henry Schein. This is in healthcare as well. And we have, again, you've got the PMO moving up. Notice here in the thumbnail that it did start to turn back up in positive territory. So I do like to see those bottoms hit right there on the zero line, because as long as it is staying above the zero line, that tells me that there's internal strength. And of course, you want to see that with your PMO. So it stayed above the zero line. It's starting to make its move back up. Very strong scooter. So I'm looking for, we got the breakout from the declining trend. I would be looking for a move up to that 87.50 level at a minimum. I think you could see it move above 90, but I think that looks pretty good. That chart looked good. Invitae Healthcare is a biotech, so beware. They do move pretty fast in various directions, up and down. Right now, I like that break we had. You can see right here above the overhead resistance, we had that consolidation zone that formed that bottom. We couldn't get above the 50-day EMA, and then boom, last week we were able to do that, and it has stayed above the 20-day EMA. We're seeing that PMO buy signal come in, and look at the volume on the OBV, looks very good. 99.2 for a scooter. So this one still looks very healthy, healthy in the healthcare. That really was not intended, but I think we do have more room to run on this one. And I like that it's already pulled back after breaking out above that 20-day EMA. You can see it's down almost 2.5% today. So I think there's some good upside potential there on one that's already now pulling back. But the one I decided to pick was NRG Energy. It was the only utility on the list. And I didn't pick it because of really that it was a utility. I picked it because I liked the breakout here that we're seeing. And I'm going to annotate, and then we'll pass it to you, Tom, and you can take over. But there you go. I'm going to put it right there on that line. We got the breakout. Actually, when I looked at this chart earlier today, we were trading just slightly above this overhead resistance from these previous tops. But we've got a really nice setup on the PMO. EMAs still look really great. I would expect to see this breakout and move further to the upside. So I like NRG. I am taking NRG. Let's see, at what is the current price? $37.99.
All right, sounds good. I am going to kind of explain a little bit the way I'm looking at the market. Last week when we started, when we were getting into the Monday setups, the market was in a panic state. We were very oversold. The VIX was up in, close to 30. The VXN was in the mid 30s, generally areas where we see a bounce. So when I looked at the setups last week, they were mostly aggressive stocks looking for bounces, and the S&P did get that bounce back to the 20-day. So the stocks that I had on my list were stocks like AV, which had been beaten up. You can see the bounce to the 20-day. Trade Desk, TTD, which had been beaten up. We got the bounce. Now we're getting a reversal there. Twilio, TWLO was another one where it had been beaten up, and there's the bounce, and now you can see that it's starting to roll over. So I want to stay away from those stocks that I liked last week, and I am specifically looking at areas of the market that I think will do better. I think I might have one technology stock in my list, and it's getting beaten up pretty good so far today, but we'll see. My pick for this week, I think I'm going to go with Darden Restaurants. DRI. So let me show you the chart here. It too has been moving lower. Here was the gap up with earnings, and then it went down. But notice it's been finding support down here around the 103 to 105 area. Today it got down as low as, I guess down at the low as 105. Friday it was maybe down around 104, maybe even in the 103s. But I think this one's got a shot to make a run back up to 122.50, especially given the overall group. The restaurants and bars, here's the chart right now, restaurants and bars. Erin talked about Starbucks earlier with the upgrade. Many of these restaurants and bars are doing really well right now. So two of the stocks that I have on my list are restaurants and bars. The first one here, DRI, is going to be my pick. So 107.10 will be the price. I know it's up already 1.7% today, but the one I was going to pick was doing even better. And so I'm going to go ahead and hold off on it. AMT, you can see up more than 2% today. It had a beautiful breakout with earnings, got up to 162, came all the way back down. Look at that nice hammer that prints on the 20-day moving average on Friday. It is bouncing off of that. From a trading perspective now, I've got maybe about $7 to the upside and probably about 5 or 6 to the downside. So the reward to risk there is not nearly as good as with Darden. So DRI, you can see from here, if my target ultimately is the 122, and I'm okay with the stock as long as it holds around 103, 102.50, something like that, I've got a much better, much stronger reward to risk ratio. So I'm going to go ahead and go with DRI as my pick for this week. Other stocks that I liked, actually, let me show you the other restaurant, BJRI. Here on the downtrend, we are getting a nice reversal. Look at the tails down here at 60. This is an area where the stock has held after the big gap up back in July. It came all the way back down, went just below 60, reversed. 2 days later, or 2 of the next 3 days later, it also went below 60 and it held and reversed. And now you look at 2 of the last 3 days, getting down to the 60 level and turning back to the upside. I would expect this is a stock that could make a run back toward the upper 60s to around 70 to test the high from last week. So I think this is one that sets up pretty nice, but I'll go with DRI as my pick. Other stocks that I liked, IPG. Nice move up here with heavy volume. We pulled all the way back down, tested this area of support, and that's where we are right now. So again, this is one that I can keep a fairly tight stop on. OFG, this is in the banking area. I like the bull flag here. Beautiful move up. When you consider what the banks are doing, and here you've got a company that is moving straight up, very heavy volume, and consolidating in a flag in an area, the banks. Let's pull up the DJUSBK so you can see what that index is doing. I mean, it's been under a lot of pressure to the downside. So OFG, you've got a nice relative performer here, and it's in a bullish pattern. So this is one I certainly could stick with and keep a fairly tight stop. I'd be concerned if it loses 1650 to 1675 support. I don't want to hold it all the way back down to 1475 area. Let's take a look at CPT. This is a REIT. AMT, which I showed you earlier, was a REIT. And let's pull up CPT because this one I think also doing well today. And by the way, I put these setups out before the market opens. So if you ever want to go into my blog on Monday mornings, you can go in and look at these setups before I talk about them here during the show. But I liked CPT going back down, testing the support area. I also liked it because it's a REIT, and I do think that the market overall is a little, I don't know, I'm a little nervous about the overall market this week. So I think some of these more defensive plays or areas where the market's doing pretty well, I think they make a lot of sense. So anyway, CPT, I think down near that support area is good. I'd look for maybe a move back up 94, 95 area. And FCN, last two here. FCN is an industrial business support services company. And you can see after moving up about a week and a half ago, we've returned to the scene of the crime where we gapped up from. I think the 66 area is pretty big support level for FCN. And then the final one, the only really risky one I was looking at was Zendesk, which is in the software space and in technology. Really been getting beaten up. We didn't even get a test back to the 20, but notice the volume started to come back in on last week, and we're down near what I think is a pretty important support area around $52. So this is one I'd keep a tight stop on. Really want to be careful, especially if impulsive selling begins to kick back in the market. But I think Zendesk, ZEN, is one that possibly could get or could have a recovery from here. So let's do a quick summary. You can see the setups. Erin is going with NRG from $37.99. I went with Darden Restaurants, DRI, 107.10. We'll see how we do next week.
Indeed.
All right, it is time for Earnings Spotlight. This Earnings Spotlight brought to you by earningsbeats.com. Earningsbeats.com provides high reward to low-risk trading candidates, and they'll teach you to focus on the combination of strong fundamentals and strong technicals. Learn to exercise the patience and discipline of an experienced trading service. Earningsbeats.com, better timing, better trades. Mr. Hopkins.
Morning. Good. How are you?
I'm doing good.
Yeah.
Okay.
Had a very nice weekend. I live like you do. I live in South Carolina now. I live in the Charleston area.
Uh-huh.
And, it was low 70s. I got no problem with that.
That works.
That works.
Yeah, I'd be fine if we'd have low 70s all winter. I'm not a wintertime person, so that to me is winter.
I grew up in Detroit and lived in Chicago, lived in DC, so I've had my fill of winters. People say, I really love the four seasons. I don't mind them, but the first time you go back to that, below freezing, icy condition, about 5 minutes of that, I'm over it.
Yeah, I'm not in for the ice. I'm a golfer, and I don't see a very nice correlation between ice and golf.
I hear you. Hey, I was reading your article this weekend.
Yeah, I'm pulling up. I wanted to start with this. I thought you could look out of this because, I don't buy stocks before earnings reports, but I know a lot of folks do. They do like to take chances. I mean, let's face it. I mean, if you like the excitement, it's kind of like being at the roulette table in Vegas right before an earnings report. So I focused this weekend in the Chart Watchers in my article this weekend on 3 companies that I thought were going to be really interesting to watch this week. And the first one was Turtle Beach Corp, which is ticker symbol HEAR. And when I look back at some of the gains that this company has had with earnings reports, and I listed them in here, 3 of the last, I don't know, maybe 12 reports, you can see these returns are ridiculous for one day.
I say that would kind of make your year, right?
Yeah, and the thing is, the stock is consolidating here. And we're going to pull up. Let me go ahead and pull this up and get a live version of what's going on with the stock today. Yeah, you can see it's kind of reversing back down. But here was the that 64% or whatever move that we saw in HEAR back in May. And the stock continued moving higher. But this is a company that was under $2 back in March, and it went all the way up to $34, $35, and is now back down around 20. I don't know what the heck this one is going to report. This company is going to report, but they report on Tuesday, and I expect some fireworks one way or the other. Yeah,
it's not going to be a 1% move.
I'd be surprised. I would definitely be surprised. And, they did come out with some pretty good numbers. But anyway, I just wanted to point that one out. Twilio. Now, this was a stock that I had out as a setup last week. It made a nice move to the upside. Here are the last 3 earnings reports and the reaction that Twilio has seen. And you can see, back in 2017 Q4, 16% gain the next day. And then the 2 earlier quarters in 2018, you can see huge next day advances on TWLO. Now, here, and you can see on the chart, pretty much where they were. Here was a big gap up that we saw back in August. Here's the one in May. Here's the one in February. I don't know whether it's going to do it again, but I thought it was interesting to at least see this has been one of the best companies in terms of reactions after earnings in 2018. And I don't know. I mean, would you ever get in, John, before an earnings report?
Let me tell you a funny story. Okay. Maybe you can pull it up at some point. We had a stock on a trade alert out to members, QNST, right? QNST.
Mm-hmm.
And, Tom, we don't like to hold stocks into earnings, right?
Mm-hmm.
For some reason, we missed this one, meaning that it was live when they reported earnings. The morning we still held it, and we had a profit target. We had a price target of 1460.
Oh my God!
So I felt good. It's like, well, we're going to get away with this one. And I wrote to members saying, for some reason, unusual, but we missed, this one reporting earnings. So let's watch for 1460. That's our target. If it hits, we're out. Okay.
Yeah.
So we got out. And but you know what? You can't look at it like that, because let's say you had the stock and you had a 1460 target and reported the next morning it was horrible and it was 1210. It would.
You want this one?
You go. Right, yeah. There's Cisco, right? They missed earnings. So, we got lucky we got a 10% profit. I didn't know it was going to go up another 30%.
Yeah. Well, actually, this one, from what I recall, because I remember this one came out and I was looking at the report, I think they missed on revenues. I think they beat bottom line.
Yeah.
They missed on revenues. So you could have taken it on the chin. It
could have taken it on the chin. But it was still painful to watch.
Yeah, you never know. All right, I got one other one here.
Okay.
Haemonetics, HAE, which I was looking at this one, and this has been a pretty strong performer. I mean, you can see the huge run up now over the last month when the market was getting hit in October. You can see the stock really pulled back. But this was a stock that went from 70 to about 117.5 in 5 or 6 months, as you can see. So really strong move to the upside. And over the last 4 quarters, HAE has beaten both top and bottom line. Mm-hmm. And look at the market's reaction over each of these last 4 quarters. So you can see, if you go back, you'll find them. But these were the reactions. And this is a company, all 3 of these companies, by the way, will be reporting on Tuesday.
Okay.
This, I think, comes out before the bell, and I think the other 2 might have been after the bell.
Yeah.
But I'm going to bring up one more, and I want you to look at this one, because this is Nectar, NKTR. And, okay, the chart doesn't look like anything special. Mm-hmm. But let me just tell you that NKTR has had some pretty interesting reactions to its earnings over the past, several quarters. But let me give you some of the numbers on NKTR as they reported these last few quarters. So the first thing here is that the last 4 quarters, they've reacted positively, including one quarter, I think it was 2 or 3 quarters ago, they went up more than 21%.
Okay.
This was not earnings related, by the way. I don't know. There must have probably some other announcement, maybe related to a drug or something. But anyway, went up 21% back in March of 2018. So that was back. Let me stretch this chart out so we can see some of these moves. So March right here. Here was
the wow, look at that candle. Yep.
Oh my gosh, yeah, 21%. Back in November, so right back here, November 7th,
I see it. Yeah.
12.9%. So the stock has, had a pretty good history. And when I go back and I look over the last 5 years, this company has gone down more than 5% after earnings only one time.
Okay.
And it's gone up more than 5% 9 times, and more than 10% 7 times. So this has a pretty good track record. Now, I don't like the chart, but they do tend to come through with their earnings report. So this is one I'm going to be watching as well. I think they come out on Wednesday.
The one thing I'll say, just because I tend not purposely to hold stocks in their earnings, it's happened a few times. And I think I can report generally that overall it hasn't been a good experience.
Yep.
So the only thing I would say is if because some people hold stocks and they want to hold them for a long time, that maybe what you consider doing is maybe holding a smaller amount. If you have 500 shares, you say, I'm going to hold 100.
Yeah.
So if something happens and it works, I'm in. But if it goes against me, I'm not going to get creamed. How many times have you seen a stock take 3 months to inch its way up 12%?
Yep.
And they report earnings are down 18%. It's like, oh my God, I've held this for 3 months.
Yep.
It's very, very discouraging.
They can go both ways. I mean, hey,
Yeah.
you can get a big pop, but you got to be ready to accept the risk of what you can get to the downside.
Yeah.
But I didn't mean to take up all your time. I just thought that was interesting.
I'm going to whip through a couple of things real quick, okay?
Okay.
I need a 9-month chart on Netflix, just because it shows it so nicely. This was in my Chart Watcher article.
Okay.
Okay, so you saw that the company reported their earnings, and it had, made a nice move, and then in just 2 weeks it just kept going down.
Yep.
I eyeballed that thing. I said, I got my target. That late March low, 271.22 or something.
Yeah.
That's it for me. I said, I'm going in when that happens. It got within a penny. Okay.
Yeah.
And the market was having some trouble. I said, I'm going to give it a couple more dollars, like 268. So I wrote to members, said, well, we'll enter 268. Well, it didn't get 268.
Yep.
It went up $50, and the reward to risk there was so high. I kicked myself because it's one of these things you got to trust your work.
Yeah.
And this was a case of, if there was ever like a solid price support level, that was it. And, so it never made it out. I still think, when things settle down, this stock could have a decent move. But it goes to show you, when you do your work, sometimes you just have to, depend on it. I would have had a tight stop in it anyways. And it probably at that level, I would say it had at least a, 8-to-1 reward to risk to the upside. Mm-hmm. And you got to trust your work, if you're a technician.
Yeah, I tell you what, looking at this chart now, and I agree with you, that move up there and then pull back, that established a big low, went all the way back up, put in this high. We've come all the way back down to test this now. This is a neckline. We just bounced up, potentially putting in a right shoulder, left shoulder over here. Now, I'm not bearish the market. Mm-hmm. I don't believe these topping patterns are going to play out, but I think you better recognize them. And Netflix now has a very important neckline sitting down at that 270 area. I hope this company continues to hold on to that support area.
Yeah. And then just a couple of other real quick. Tom, this is the kind of market you have got to have tight stop and you have to take your profits. I got a couple real quick. Mm-hmm. WSM, Williams-Sonoma. This is a company we put out an alert out to our members on the 29th of October, had a $63.40 price target. It got to 63 and change, and I issued a profit alert, and it proceeded to go up to 64. But then you see what happened, okay?
Yep.
It stopped. And the whole point is, all right, so I missed, the profit target by 30 cents.
Yeah.
But what I like to do is when I have if we send an alert out, and let's say it's got a 10% upside, and you're 10% upside, you're up 9.5%.
Yeah.
You got to do something. Either you're going to raise your stop dramatically, or you say that it's not worth it for the 0.5% because the reward to risk is shifted, to the downside. So that was one we nailed. And here's another one. Talk about got a little bit lucky on this one, but nonetheless, CLDR. This is one we put out on the 31st of October at $13.72. Had a $15 target. It opened this morning, I think, at 15.08 or 15.11 or something like that. And so issued a profit alert. That one, made it all the way up to where I thought it would. But you can see what happens on these things. If you don't take your profit, look what happened to that thing after it hit the target.
Yeah. I mean, here was the breakdown. I mean, it went down to 15, bounced a little, and then went back down below 15 right here. And so that would be the key resistance level. And I think Erin mentioned earlier, I think this was one of the upgrades today, or maybe I think it was today. And that's probably why the stock gapped up the way it did. But the failure here, getting up above that 20-day, and now the failure, I don't like that. I'm seeing it on a lot of stocks.
Yeah, and it just goes to show you in this kind of market that you've got to honor your stops. We got a little bit reckless for a couple of weeks where we kept extending our stops. Mm-hmm. Did not pay off. Very rare for us to do that. We said, hold it. Let's get back to what's really worked for us for many, many years now. and we're right back. And sure enough, we're right back on track and beating the market. But if you start trying to get cute and lowering your stops, lowering them again, we're going to get through this next day, the next day, the next day. Next thing you know, your 1% stop is 10%.
Yep.
It's disastrous. You can't do that. So we've completely, learned from that experience. And like I said, well back on track. Going to keep our stops very tight in this market. Take the profits when they come along. Raise your stops if you got a nice, profit already, Tom. That's the way to do it.
No doubt about it. Let's go ahead and bring up the summary of the stocks we just covered. There's a lot to be said for those who stick with a company a long time and, hold through many, many, many earnings reports. I mean, think about the Apples and Netflixes and some of these companies that have done very well. And those are the arguments for staying in and not getting out of earnings. But there's a lot of companies that go up one earnings report and the next earnings report, they give it all back. I mean, it's not every company out there is Apple and Netflix and, Amazon and those types of companies. You have a lot of companies that simply over long periods of time go nowhere, even go down. And they just have these periods, 1 or 2 quarters where they outperform and then they're right back down into a downtrend. So you do have to be careful, I think.
All right.
All right. It is always a pleasure to have you on here, my friend. Have a great week, John, and see you in a couple of weeks.
Okay. Take care.
All right. Appreciate it. And there he goes. And there you see the stocks we just covered. And was that one, Erin, that you had looked at earlier, CLDR, or am I just making that up?
Nope, that was one that, it came in as an upgrade. I didn't look at it, but mentioned it.
Okay. Yeah, I thought I heard it. And I don't know, sometimes, I can go crazy.
Oh, I know. Exactly. That's why I give you 10 and 10 symbols you've already covered at the top of the show. So exactly. It happens.
Yep. All right. Okay. Well, speaking of 10 and 10, we ready?
Yes, I am ready. Let's look at the RRG. Very quickly here. We had about 29 requests here. What I always like to look at is, not only kind of the outliers here on the RRG chart itself, but really just to look at the sectors to see what you all have been requesting. And I think it usually gives us a little bit of an idea of, where if the interest in the market is in defensive categories like you're seeing right now, that's an awful lot of defense. That's over half of our request in a defensive category. So I think that's pretty interesting. All right, let's get started though. First one, SBRA, Sabra Healthcare.
All right. Yeah, I haven't annotated it, but I'll do it right now. And, first of all, it's a REIT, and many of the real estate stocks, as Erin's talked about for a few months now, real estate has been doing much better on a relative basis than many of the other areas of the market. And this is a stock in that space. So, yeah, I think it continues to look pretty good. I would continue to pay attention to it and trade it if you want to be safe, as long as it continues to hold up and hold on to key support levels. So right now, what I would be looking at on this stock is support around 20.5, resistance around 23.75. And we're in the middle of that range right now. Actually, the stock having a really good day today, up 4%. But if it gets close to that 20.5, I think that as long as we keep putting in higher highs and higher lows, and that was one of the things I was talking about on the Netflix chart with John just a couple minutes ago, as long as we can hold that prior pullback, that low, then I feel like we're still in an uptrend. So that's what I would watch to the downside here. Currently, I don't think there's anything to do, but I do like this space. I like this chart. And I would suspect that we're going to make another run back up for that 23.75 area.
Okay. Let's see. The most popular in the chat room is Amazon.
All right. Amazon. I saw them in the news, something about free shipping for everyone. Yeah, this one, the overall market, I cannot ignore heavy volume selling. And that is what we have been seeing on Amazon. Does this change the fact? Is it a bad company? Of course not. It's a great company. But when you start heading into a downtrend, I think you have to be really careful. Even the best companies can struggle for quite a while. And you can see that the most recent low, that is a hollow candle on very heavy volume off of a severe downtrend. That is an important low as far as I'm concerned. So anything moving back down toward that, I would maybe consider buying at that level with a fairly tight stop. But in the meantime, I am not going to chase these rallies because you can see what's happening to Amazon, which is happening across many areas of the market, is that you're struggling to get back above those declining 20-day EMAs. And we got close, got up to 1,700 on Friday, and now look at us, we're down almost 100 points from where we were. I would just say no thank you right now for Amazon.
Okay, let's look at TAP, T-A-P, Molson Coors.
Yeah, I will drink to this chart.
Me too.
Yeah, nice gap up off this downtrend. I think it's a change of character on this chart. So I would treat this as a breakaway gap. And for me, a breakaway gap is simply a stock that's going in one direction, and then you get a gap that changes the character of the chart. I would play this stock as an uptrending stock now. And so that means a couple of things. Number one, I think you've got really good price support coming in between 61 and 62. Once you gapped up and you pulled back, that's where the buyers came back in and resumed buying. Stock made a huge move, was up to almost 68 the next day after trading at 61 at the low on the day that it gapped up. That's a lot of continuation to the upside. We've come back down on lesser volume, and now we're near that support area. And now look at the 20-day moving average rising as well here. I like the stock. I would be a buyer on the stock between 61 and 62.
Okay. Let's see. Next one up, EOG. And that is energy, obviously.
Yeah, EOG Resources. Well, I mean, again, another one selling off, heavy volume, well below the 20-day. Could we bounce and test the 20? Yes. But the point or the question is, if you're looking for that as your target, which might be $4 or $5, where are you going to set your stop? Is it going to be the recent lows? Because if it is, you're going to be giving up $5 to the downside. I just don't see a trade here. So, and especially one in a stock that's downtrending. I would be waiting to see maybe if I could hit these key support levels down here. I still think the stock goes down maybe to that 96 to 98 area.
Okay. Next one up will be ASNS, and that is Arsanis. This was the one that was a huge outlier, so I'm sure the chart is pretty unusual.
Yeah, it's very ugly. I mean, the stock was $20 or close to $20 back in late June when it gapped down all the way to $4. I'm going to pull this one up on a relative basis. Is this what space was this one in? Biotech.
Yes.
Yeah, I'll tell you what, this is the biggest risk of holding biotech stocks, especially small, obscure stocks. I mean, even when it looks good and on the chart, technically, you never know when you're going to get one of these days. If it probably doesn't have a lot of products out there, and they probably got the FDA probably came out and said we need more data or something, and the stock just got crushed as a result of that. To me, this is rolling the dice. I don't really. I try to manage my risk when I trade. I don't know how you can do that here with this particular stock. So I would continue to watch probably this, downtrend line. And until I get some heavy volume and can break above, even here when we had that massive volume and the huge move, we came back down and closed much lower. So to me, it seems like maybe it was just a little bit of a head fake. And then you can see we broke to new lows. I'm just not seeing it here. I would pass.
Okay, let's see. Next one will be SCHN, Schnitzer Steel.
All right, SCHN. Well, I mean, when you look at the group with the steel, which has been going down on a relative basis, the stock is kind of struggling relative to the group, obviously struggling versus the S&P 500. The one thing I'll say is that steel loves the months of November and December, historically, from a seasonal perspective, and you can see the outperformance is beginning here at the beginning of November. So maybe that would be something you kind of hang your hat on here. From a strictly looking at the chart, forgetting about seasonality, I think you've got a couple areas where we could maybe make a run. Gap resistance up above 28. I think we have a good chance to get there. If the stock could make that breakout and get through that gap resistance and the double top that we saw September and October, I would start to like it a lot more from a technical perspective. Maybe even think that we could maybe make a run to go back and test this double bottom breakdown. that would be the next area of major price resistance. So let's see if we can get through 28 first. I just think there's too much work here. At this point, I would just be watching it.
All right, let's see. The next one I'll give you is IIN. This is technology electrical components.
All right, another one downtrending. Just going to go with a regular chart here, just so we can see the candles a little bit better. I mean, we are trying to reverse off of the recent price support, but at this low, you can see the PPO was still setting new lows. So I'm not seeing a positive divergence. You need a lower close with a move up in the PPO. We don't have that yet. So my guess is that the higher odds is that the stock goes lower. And I would, like I pointed out on some of the others, I would continue to watch the 20-day moving average. And until we can get through it, I would pass.
Okay. How about Johnson & Johnson, J&J?
All right. Johnson & Johnson, I've looked at a lot. The problem I have here, and I think I said last week, we may have looked at this one at some point during one of the segments maybe, but I see a nice little pattern here, maybe a little cup, because I thought it would maybe go up and hit this area. But the problem I have with Johnson & Johnson is not the chart here. It's the chart relative to the group as a whole. So when you look at Johnson & Johnson relative to the pharmas, what I would keep an eye on is this right here. If you see the relative strength of J&J beginning to drop again, and the fact that it hasn't gotten through resistance, that would be my key to maybe, and I might have even said I thought maybe we get up to 145-ish. But anyway, these are the two key areas of resistance. If we can't get through those two areas, knowing that it is a relative underperformer, if this starts to turn back over on a relative basis, I would be out of Johnson & Johnson. I still like the space, the pharmas. I just would look for a different pharma. That's all.
Okay. That sounds interesting for sure. Okay, NIB will be the next one. And that is, oh, that's right. It's the cocoa ETF.
Cocoa. All right.
NIB.
I like a little cocoa in the wintertime, but I don't know. It's not quite winter yet. Yeah, I mean, we're downtrending. Here's the key for me on this one, because you are moving lower. You're setting lower lows and lower highs throughout. So if you're just looking at the lows, you got this. Oops. You got that right there. You've got this over here. You got this right here. And in between, you can see the lower highs. Well, we're trying to get back up and move through that prior high, that prior reaction high. If we could get back through, say, 27 3/4, I would begin to look at this chart a little differently. But until we do that, I think we've got a downtrending chart, and I would simply avoid it.
All right. And the very last one we will do is going to be GTN.
All right, GTN, that's great. Great
yes.
Decision. Yeah. Sideways consolidation off of an uptrend. I like it. We are just consolidating right now, so I don't really see a whole lot. A little false breakout there. I would have expected this breakout with heavy volume to have done better. False breakout, we went all the way back down to the support area. But I'm going to draw it just a little bit lower, because I think as long as this is a gap support with heavy volume from back in August that we've held, and you can see we've gone back and tested it again and got close just recently. So I'm going to say about 1610. That's going to be a key area of support. And now I'm going to raise this resistance up to that prior close here, 1850. So 1610 to 1850. Right now we're sitting at 1750. I don't think there's a trade here right now, but I like the uptrend. I like the sideways consolidation. If it moves back down, as it starts moving down towards 1650, I think the reward to risk really starts to look better here.
Excellent. And that is 10 stocks in probably 10 minutes. I think we did really good today, Tom. Here are the symbols that Tom annotated. You can find these charts as annotated in the Market Watchers Live blog. Just go to the blogs tab, click on the Market Watchers Live blog, and the link to these charts is right there at the top of that page. All right, time for our final market update. Let's go ahead and see what is going on currently. All right, and here we go. We were definitely up on the morning, but we're starting to pull back just a bit here. We can see that the Dow Jones currently is up about 0.38%. S&P 500 up slightly right now, 0.16%. NASDAQ spending the day in negative territory. We definitely, and I think you mentioned it, Tom, a bifurcated market right now. The techs are certainly suffering more so than we've seen the other large caps. And I think that is evident when we see what's going on with the NASDAQ right now, which is down over 1% currently. S&P 100 is up right now just a little bit, like the S&P 500, up about 0.15%. S&P 400, we're seeing right now up slightly 32 cents. And Russell 2000, the small caps, unlike the large caps and the mid caps, Russell 2000, like the NASDAQ, is spending most of the day in negative territory so far. Russell 2000 down 0.64% currently. Canadian markets are up on the day, but they did pull back from the intraday highs. Treasury yields, we can see, are lower somewhat here, reading 3.193%. UUP started the day lower, is trying to make a bit of a comeback, and look at gold. Pretty much the same look, falling lower at the beginning of the day, but it is trying to hold that up and move and take back some of those losses currently, but interesting to see them both sort of traveling in the same direction, but I'll talk about that more later. TLT gap up and now consolidating sideways, currently up 57 cents at 112.57, and USO is up about 1%. Currently had a nice big gap on the open, has pulled back from its intraday high, but still looking pretty good for oil. And that's all I have for my portion of the final market update. What do you got for us, Tom?
Yeah, just real quick, wanted to go in and take a look again at the sector summary. And you can see, again, real estate, utilities, consumer staples, three of the defensive groups staying near the top. And then these are the three groups I mentioned earlier that really were the culprits for the markets, all the major indices going so much lower throughout October. And there they are again, right on the bottom. So we had a nice bounce in these groups last week, but we're starting to roll over. So the thing I'm watching closest today is going to be the NDX. I don't like the fact that we have moved down below these prior lows that we saw on the gap up and rally last week. Every time we came down to about 69.25, you could see we bounced. That was not the case today. We went down as low as 68.59 and change. So I don't know. It just looks to me like we're starting to roll back over again. I think we need to be careful. We didn't hold the top of gap support. The bottom of gap support will come in closer to 6,800. That would be the next level I'd be watching for.
Okay, very good. Let's see here. Now it is time for the Decision Point Report. So let's go ahead and get started with that. All right, so here is our Decision Point Report. Actually, the date is wrong. I'm apologizing right now, but this is November 4th, 2018. So this is the November 4th Decision Point Report. All right, so we're going to go over the weekly and daily charts for the large caps, mid caps, small caps, as well as the big four: dollar, gold, oil, and bonds. I'll also show you our decision point indicators. So let's go ahead and get started. I wanted to show you the Decision Point scoreboards. You can get these from the home page. It's just one of the tile selections. Instead of scooters or top 10, you can get the Decision Point scoreboards. And right now, as you can see, short and intermediate term certainly showing the weakness. Long term is still holding up here. Really, the long-term trend model signals are based on 50, 200-day EMA crossovers, and there's a lot of margin between the 50 and 200-day EMAs on all of these indexes. So it's going to take a long time before we see that change. And we are seeing on the monthly charts, which I looked at last Thursday, you can find that on YouTube. I noted that our long-term PMOs are in decline, but they're still far enough away from those sell signals that I think we're going to hold on to these buy signals for a little while longer. I would say that if we start to see long-term PMOs or any of this side of the scoreboard switch to red, I would start to get very concerned about a bear market. I have to also tell you that you might want to go check out Carl's article, and we're going to go over there right now. Carl writes in the DecisionPoint blog on Fridays, the weekly wrap. And this is where he goes into, what he's thinking about the market. He looks at many of the same charts I'm getting ready to look at right now, and you can get his spin on it. But one of the things I noted when he wrote it, and it's not in the opening paragraph, but he is thinking we are bear market bound. So I just thought I would give you that little notice. I am still on the fence. I just am. I'm seeing the kind of things I don't want to see, but there's still a little bit of strength out there in pockets. So I'm not quite ready to jump on the bear market, but Carl has. So I did want to point that out to you. All right, so let's get started here with the Dow Jones. Currently, as you can see, we've got the rising trends. I tightened up a lot of these rising trend lines because I really wanted to see how the recent breakdowns, if there were any, what they looked like. And for the Dow Jones, of course, we got the breakdown from that rising trend, but we did hold support at that June low. But one thing I do want to make a point of when you look at these large cap indexes in comparison to the mid and small caps, which we'll look at later, they've all tested these lows back here from February and March. The large cap indexes have not done that yet, and in fact have bounced quite a bit ways from that. I still think we are vulnerable to testing those lows, and part of the reason why is because I have seen the mid caps and small caps really starting to fail. We're not seeing any kind of, the kind of activity we'd want to see on the NASDAQ. We've got, in fact, a bifurcated market. One thing that I thought was very interesting is that on all of these large cap indexes, except for the NASDAQ, we have PMO bottoms in oversold territory, right where we had bottoms, back here in April, which is what we again would like to see. And we're getting the bounce, and they are moving up toward buy signals. However, when we look at the NASDAQ daily chart, it looks a lot different. Look at the PMO. It was rising, but it's now starting to top below the signal line. And whenever the PMO tops below the signal line, I take that as an especially bearish notice or flag. And you can see we had that happen a couple of times here where we tried to make that turn, and then we ended up topping instead below the signal line. And again, that's just not what you want to see on the price. Currently, when you look at the NASDAQ 100, we're holding some support right here at that 68.50 level. But we dropped below that. We just never got down, though, to test these February and March lows. And I really I'm looking for that. And, that would be the place that, we could fall down to, which is what I'm thinking. We're going to test those lows. But that will be the spot where we can get back on track. They need to be tested. I don't know if that's going to lead into, drops further into the bear market. But right now, I'm very cautious. We've had these breakdowns. Currently, we're holding this little support area here for the NASDAQ, but a top below the signal line is bad news. Let's look at these weekly charts a little bit here. The Dow Jones, like I said, I redid some of these rising bottoms trend lines. I wanted to get them as exact as possible because I wanted to see where the recent low had hit for last week. And they match up pretty well to these rising bottoms trend lines drawn from that 2016 low and the 2016 high you got back here at the end of the year, right? Looks like right before the election. So looking at those two lows and connecting them, we're holding on right now to that support, if you want to call it that. We're holding on to that rising trend. but I still am looking for a test at this level of those January, February lows. Look at the NASDAQ weekly chart. And here we go. Looking pretty ugly. It's holding on, like I said, to the 6,500 level, but that's still not as low as what we saw previously. This rising bottoms trend line, we have broken down below. And, you know, again, we didn't have that on the Dow, and I'm going to show you the S&P as well. But we are holding this area, like I said, of some support. But look at the intermediate term PMO. It went on a sell signal, and you'll notice on every single weekly chart for these large caps, none of them, those PMOs have decelerated at all. The Dow, which I think has been the stronger of them, notice that its PMO is still not even decelerating much. And we've got the S&P 500 weekly chart. And there we go. Another PMO sell signal. And again, no deceleration on this move in the intermediate term. I'd like to see that PMO at least start turning up, but it is not. So that tells me we are certainly vulnerable to more downside. And here you can see I drew the rising bottoms trend line from these bottoms back here in 2016 and 2017, and that lined up almost perfectly with the test we got at the end of the week last week at that 2,600 level. So it is a good spot. I mean, for a bounce, you've got to hold the rising trend. You're holding that support level. Maybe we don't have to go down and test those lows from January and February, but you know, looking at that PMO, I suggest that we will. All right, so let's go ahead and look at the mid caps and small caps here. All right, very mixed messages. That's what I got from these daily and weekly charts. So this is IJH, which is the S&P 400 ETF. We have long-term sell signals that have triggered, where you get the 50 crossing below the 200-day EMA. And at the same time, we have PMO buy signals and a nice strong OBV volume, getting a lot of that accumulation. My note is, although that OBV looks pretty healthy, when you look in the thumbnail here, volume has been dwindling, continually dwindling as we've been rising out of this low. And that is a concern. And I think that's something that we should consider when you see that kind of activity with the volume starting to peter off, but prices are rising higher. Remember, volume needs, you know, price generally follows volume. And in this case, it's not. We've got a divergence, and we have a long-term sell signal. So while I think this is positive, getting these buy signals in oversold territory, you know, I'm not going to hang my hat on them at this point. I think there's still a lot of negative things out there to be concerned about. S&P 400 weekly chart. As you can see, that rising bottoms trend line broken, tested the 2018 lows, and now it does look like we might be headed back up. Again, the big problem though with these weekly charts are these PMOs, these intermediate term PMOs that are just not showing much in the way of deceleration. You want to see a little, at least somewhat of a deceleration and a turn to start to come out, and we're just not seeing that yet. So again, I think we're still vulnerable to quite a bit of downside. And again, here's this is the Russell 2000, and you can see we don't have the long-term sell signal just yet, but it looks like we're going to get it. And unless price get itself back above the 200-day EMA very quickly, we will get that sell signal. At the same time, though, here we are again with a buy signal for the PMO. And, you know, that's based on this price move going to the upside. It's difference in price, kind of an indicator. But notice again, volume is starting to peter off along that rising trend. So that is something to consider as well. The weekly chart for the Russell 2000, there you go, broke down. Tested, as I said, those lows, and now is holding above this rising trend line currently. So we might be able to preserve that rising trend after that breakdown, but now we're heading back up. Of course, you can see we are trading above it right now, but this is, of course, 1 day's worth, not even a full day's worth of price action. All right, let's look at some of these indicators. I'll show you the ultra short-term indicators, but I don't think we're seeing that this chart is going to be telling us much here. We look for climactic readings. The last readings we had were far from climactic. What I would like to point out, though, is the Bollinger Bands on the VIX have now started to really shrink, and that suggests that volatility is starting to calm down a little bit. Of course, we're still seeing readings at 20 and higher for a lot of what we've been looking at for the past couple of weeks. But I do like seeing those bands starting to shrink, because less volatility is a good thing. You want to see that going into possibly, a move to the upside, or a move that you might want to look at. I did notice too, and it's more prevalent when I look at this chart, what could be a price island forming here on the S&P 500. This is the SPY. I'm looking for a decline out of this. I'm looking for that gap to get filled anyway. So, an island reversal setup, if you want to look at it as that, I think we could consider that. Short-term indicators, we had a nice big rockin' move all the way up above the zero line on this move to the upside. We're starting to hit overbought territory. We saw the effects of the negative divergence through the rest of this decline. Now we're getting that pop to the upside, but we're getting really overbought very quickly. And typically you get overbought and it's time to make a reversal, typically, but not always. So we'll be watching that as well very closely. They're not really decelerating much. So I suspect we're going to see a big spike to the upside like we did back here in February after that low. And of course, we had to pull back again after that. So that's what I'm thinking. And I know Carl was thinking the same thing when he looked at the intermediate term indicators. We've got these upside breakouts or signals, with them crossing above their signal lines, coming out of oversold. All of this is positive. This is what you want to see. We saw it back here. So this is what we want to see. But what Carl is thinking, and I have to agree at this point, is I suspect we're going to see some upside here, but we're going to end up with a top below the zero line. And that would be a really good indicator, of course, that a bear market is looming. All right, let's quickly, let's quickly go through the big four. Right now, I am, sitting here kind of neutral on the dollar. I've been very bullish. It's holding this area of support, at that August top so far, but it's really, it's not convincingly holding it right now, but it is holding that gap support. And, I like that, but now I have a PMO that is topped and is turning down. The scooter is still promising here for the dollar, but I think it's not in the best place at this point. I suspect we're going to see a little bit of consolidation sideways. That's what I'm looking for. And here is the weekly chart, which I think also supports that premise. We do have the bottom that came in above the signal line. So intermediate term, things are looking pretty good, but this area of overhead resistance is just been very difficult. I matched it up this 2010 top, that 2580 level. We need to get that breakout. We just haven't been able to do that yet. So for now, I think we're going to, bop up against that resistance level, but I don't think we're going to break through it just yet. And gold, as you can see here, is sitting up against overhead resistance, consolidating. I have been waiting for this thing to break out forever. We're now getting some more high discount readings, and as far as sentiment is concerned, that means upside potential for gold. We have a top above the signal line for the PMO, and again, we're seeing the decoupling from the dollar. I suspect it's just going to be another week of consolidation for both of these. The good news is on the weekly chart, a PMO buy signal for gold, and it is maintaining above this declining tops trend line that we have. USO, oil. Not looking too good, but I think it might be at that place for the turnaround. This could be the spot. It's testing that August low. We did get the intermediate term trend model neutral signal, but I'm starting to see a little turn in the scooter here. I would like to see a bit of deceleration, more so on the PMO, but it is very oversold. If we're going to get a bounce for oil, this is the place to get it. If we lose that support level, and especially this $13 level for USO, it's going to get ugly. When you look at the $13 level and actually the $12 level, that would be the spot to look for a decline. If we don't hold that $13 level, I would be looking for a move down to 12. But if we can hold that, we might be able to get back up into this rising trend channel. TLT. It is now, like oil, sitting at some support, a very important support level. However, we had a bullish pattern and it had a bearish breakdown. So I think that's especially bearish. We have a PMO topping at this point, ready for a sell signal. I think we've got the last hurrah from bonds. We're getting the pullback, and I suspect it's going to continue. And when you look at the weekly chart, I think that also makes that obvious. All right, that's all I have for the DecisionPoint report. I have summary slides, but I'm not going to go ahead and read these. I will print these in the Market Watchers Live recap, and it basically gives you a kind of a consolidation of all of those analysis that I just gave you on all of the big four and the various indexes. And that is it, Tom.
Yes, we are just about the end of another day. Unbelievable, right?
I know. Monday.
Here is the poll that we put up earlier, and I was really fascinated. I'm fascinated to see the response here. So 83% that responded are current subscribers to Chart Watchers, which is great.
Yes.
13% not, though, and I would just suggest to the 13% that you become a subscriber. It's free. It's absolutely free. You're not going to be spammed. You're going to get your Chart Watchers newsletter twice a month. And there's just a lot of really good information that comes out in that every couple of weeks. It's not it's not like we're day trading, because we're not looking at this and providing information and analysis every day. This is once every couple of weeks. So it just kind of gives you a really good overview of what a lot of different folks here at Stock Charts are thinking. And then the 5% of you who are wondering what Chart Watchers is, all right, that means I need to take the screen for a minute.
Yes, I think so.
So let's take a look. First of all, this is Chart Watchers. Now, this is just the blog articles. And so you can see Greg Schnell had posted an article. I had posted an article. I talked about this a little bit earlier in the show. There's an article by Carl talking about the market being overvalued, even looking at forward earnings. A new blog that's being added. You can see that it was featured in Chart Watchers this weekend. Arthur Hill talking about a precious metal. John Murphy, of course. I mean, why would you not want to get this and get what John Murphy's latest thoughts are?
Absolutely.
And then John Hopkins, who was in earlier, also contributes to it. And so I don't know why anyone wouldn't. I just want to show you quickly where you can get how you can subscribe to this. If you go to the bottom of the member dashboard, you will see you can sign up there. Or if you're going to the blog articles over on the right-hand side, definitely check that out and make sure that you're taking advantage of everything that Stock Charts has to offer here.
Right, and then you get it right when it comes out, so all of the information is timely and not stale. So,
yep, no reason not to take a look. All right, here's your upcoming schedule. Erin, you got a workshop tomorrow, and then of course Brian Livingston. We were just talking about him. He's going to be with us later this week. So anyhow, I want to thank everybody for being with us today. Certainly complete that survey as you exit if you don't mind. We do love to get your feedback. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody. Hopefully we will see you back here tomorrow. Happy trading.